Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, August 2nd, 4:56 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend, at least across the short and intermediate term. We are in an uptrend. You can see over here at the trend gauge, leaders still flashing neutral. With a green sub arrow, we are seeing some good signs, good reactions, some emerging leadership. And short term, using our 21-day exponential moving average, all 5 of the major indexes that we review in these videos are trending above the uptrending 21 EMA, and also on a medium-term basis, trending above the uptrending 50-day moving average. However, on the long term, the 200-day moving average is still trending down, and all 5 indexes are below that. So mixed market. We give the benefit of the doubt to the uptrend when we've got 2 of the 3 heading in the right direction, but we're certainly cognizant of the fact that we're under the 200-day moving average, which means we're aware, and we've been preaching for a while, this is where risk is the highest in its market. Right now, this is a bear market rally until we continue higher and get above the 200-day moving average. So you could say we've got 1 foot out the door of any position that we enter. As I said, we're very cognizant of where we are. So what happened today? Day 2 of the pullback, but it was a distribution day. Things were looking pretty rosy midday before one of the voting Fed members opened her pie hole and said she sees no sign of slowing inflation, and that put a cap on the rally, and the market reversed there and kind of trended lower on the day. We'll take a look intraday at the charts momentarily, but first let's go through where the indexes closed. Second day in a row, the G6 finished positive while the indexes finished negative. The G6 is our in-house composite of 6 growth ETFs. We average them on a daily basis, and we keep a close eye on them to give us some insight into what the broad growth stock universe is doing. Positive on the day, nicely by 0.61%. S&P 500 dropped 0.7%, Nasdaq 100 down 0.33%, Dow Jones Industrial Average, the laggard, down 1.2, mid caps down 1%, Russell 2000 just barely down, 60/40 Global Diversified Stock and Bond Index down 0.78% as bonds took a hit today, which means interest rates were higher, and also foreign stocks were down more than U.S. stocks, so down 7.78% there. In-house, our flagship GROTECTION portfolio down approximately 0.31%. So let's get into the tail of the tape and charts of interest. But first, let's get into what we do at Revere. Trend following, and I'm showing the S&P 500 index because I want to give a quick example of the way we manage things using moving averages and price trends. So this area right here, this is kind of a downtrend and a consolidation. So we would be lightening up here, coming off of an uptrend. This was August of 2021. Another uptrend. We would have participated in this going into late 2021. Then we start going sideways. When we see this, we tighten our stops. We let the market take us out. We don't decide willy-nilly whether or how much we're going to be invested in the market. But then you see the move up here, consolidation, and then we started rolling over as the new year started breaking below moving averages, a little bit of a bounce, more of a break below moving average, and now things start to get serious where we're below the 21 and the 50. So we're cutting a bunch of exposure, and this is all on video. We do videos every day. You can go back and look at any period in time, never taken down, never edited. We tell you what we do, and then we broke the 200-day moving average, and this is the first sign that things are not going well in the market. But we bounced, then we rolled over again. Another attempted bounce failed. Nice bounce here, but then we roll over again, and then we really start free fall. And now we're in the process of trying to work off the lows here. We've been trending higher. We had a nice move off the bottom starting on 7/14, a little bit of a pullback into the Fed last week. Positive reaction to that news got us bounced off the 21 and the 50-day moving average here. That's the green line and the red line. Move up, ran into the downtrending purple line here. That's the 100-day moving average. Natural place to pause after 3 strong up days. But as I said, our second day here, higher volume, a distribution day, according to the Market Smith statistics that we track. So there's your S&P 500. Let's take a look at the Nasdaq 100. Very similar. This is one of the things I was wanting to keep an eye on coming into today. How are we reacting around this 100-day moving average and this move off of the key indexes that we bounced off of? Second day down, higher volume on the Nasdaq Composite, proving to be a distribution day. I don't normally show stochastics because they take up a lot of room, but I am going to show them for this video because there's a key inner asset correlation that I want to bring to your attention momentarily. Dow Jones Industrial Average, very similar to what's going on with the S&P 500, bounced up here, obvious close below the 21 after closing above it yesterday. Small caps, the MDY, mid caps, the MDY. Really, all the indexes have been in sync as far as their bounce off the moving averages, getting up near this 100-day moving average. Still above it here on MDY, as we've been showing relative strength there recently on mid caps and also on small caps. Here's the IWM small cap index as Market Smith has taken its time today, but there you see subtle relative strength on this move up over the last couple of weeks, still sitting above its downtrending 100-day moving average. So let's go to the tail of the tape. We'll get caught up on that, and then I'll talk about the inter-asset correlation that I wanted to bring to your attention. So we're still battling the same headwinds. Dollar has been weakened recently, which has provided a little bit of a tailwind to stocks. Weak dollar, stocks higher, strong dollar, stocks lower has been the correlation recently. Of course, we're battling inflation, as everybody knows, the Fed tightening and reducing its balance sheet. Interest rates, ironically, have been falling since the last Fed meeting when they raised rates. And of course, we've got everything going on with Russia and Ukraine impacting food and fuel. Nothing major here on the sentiment numbers. We're operating under the bull case since we got back above the 21-day moving average after the Fed. We've got our bear case ready if that would fail. We see several days of distribution and break back below the 21, we'll be pulling the plug on our long positions. Some news today, Pelosi visited Taiwan despite China warnings, and China ramped up some military maneuvers around Taiwan while she was hanging out there. Seems just a little while ago it was the crazy guy in the White House everybody was worried about causing World War III, but she also had some strong words to support Taiwan's independence. I'm sure that went over very well with the Communist Chinese Party. As I mentioned, Fed voting member Mester, she said no sign of inflation slowing and the market reversed down. Let's go to the S&P 500 and let's go to an intraday chart and we'll see what I'm talking about here. Come on now, Market Smith, participate with me, please. Here's our intraday chart. So you can see here we gap down. We sold off right to resistance, 40.80, nice bounce there, pull back from the bounce. Everything looking great. We're challenging resistance up around 41.40. See if you can guess where Miss Mester started talking about she doesn't see in any signs of inflation slowing down. You are correct if you said around 120, 125 to 130 Eastern time. You can see this harsh sell-off, 40 points, 1%, less than 30 minutes, bounce back up, and then closing down near this 40.90 level, not quite the lows of the day as we had an undercut here. And I'll talk about what happened with this undercut intraday, some positions that we took and some trades that we made. So yeah, that's when she started talking. Back to the tail of the tape. Here's what I wanted to point out here. TNX and UUP. This is the 10-year note and the dollar. Daily oversold stochastic cross has been bearish recently. Let's go to the UUP. This is the US dollar. Remember the correlation, strong dollar, weak stocks, and vice versa. So here is what I'm keying in on here. We've been seeing a dollar pullback recently. This has coincided with the rally in the markets. We've got this cross stake taking place here between the moving average and the stochastic moving average while we're under oversold conditions, which is below this 20 level in stochastics. Now, the last time this happened was back around 531, and it ran up and it got overbought, say around 615. Now I want to correspond this with the 10-year note, because the same situation happened in the 10-year note today. You see the oversold cross below 20. Last time this happened, and also happened with the dollar, same time frame, 531-ish. We got overbought on around 615. Now let's take a look at what the S&P 500 did between 531 and 615. Well, we had a nice run in late May coming into 531. We're here to 615. That's our lows. No, we were just the direct inverse of what you're seeing in the dollar and what you're seeing in the 10-year note. We were overbought. Last time we were oversold on the S&P. We're overbought this time, and we're oversold also on the dollar and the 10-year note. And last time we saw about 10% move down. Now, granted, this was coupled with CPI inflation data, and it may not look exactly the same, but it may not repeat exactly, but it sure as heck may rhyme, and we're not going to completely ignore this inverse correlation that we've been seeing a lot. So as I said, under the 200-day moving average, which we still are, conflicting secondary indicators that seem to have a high correlation lately between 531 and 615 on the S&P versus the dollar and the 10-year note. That doesn't mean that the dollar and the 10-year note can't turn around tomorrow and stay oversold, not do their cross, and the markets don't have to go down. I'm just bringing it to your attention that this is something that we're looking at, and this is the purpose of those videos, to tell us what we look for and the potential moves that we might be making. So there's the note, bearish recently. See that period back in late May. It was actually, I want to document this because I keep this, 531 to 615. So coming into today, we're extended versus the 21 in the indexes. We talked about that yesterday. Still expecting a pause or a pullback in the Nasdaq 100 and the S&P to battle against their 100-day moving average. We got that again, day 2 of the consolidation. These were the levels that we were watching. Support held to the dollar on the S&P down at 40.80. The Nasdaq 100 was all over the board today, down, undercutting and and then reclaiming support. Going above resistance, above and failing at 318. This 315.59 area is still key. This is a fib area that we're keeping an eye on, and we're battling along this area, which also corresponds to this this consolidation here from 527 to 68 on the S&P before the breakdown on CPI happened on the prior CPI report. So that's what we're watching today on support and resistance. Kind of a choppy day, not unexpected considering that we are extended from the 21-day moving average, still by 3%. It was as high as 5% coming into today. But time alleviates that a little bit. So strong sectors today. I mentioned the dollar. Solar continued to be strong, but Sedge is gapping down after hours on its earnings report. Biotech, strong day, as well as oil service stocks. Gold started strong, faded when the dollar strengthened. That correlation is still intact there. As I said, bonds weak today, which means interest rates rising. With interest rates rising, the builders were weak, banks were weak, and foreign stocks were weak. So what did we do in-house today? Let's go back to this Nasdaq 100 chart and a 5-minute chart, and we had a false breakdown today. that as the day went along, played out just fine. But here's the false breakdown. Below the opening lows of the day, below the lows of the prior day, and we took a hedge here, PSQ, inverse position in the Nasdaq 100. Ended up there was a false breakdown. We went higher, but when we ran into resistance here, our stop was going to be above the highs of the prior day. We got close to it. That's just about the time that the Fed head came out and it rolled over, and then didn't quite roll over as hard on the Nasdaq 100 as we did on the S&P 500, but we still have that position in place. And then we added, while we were rallying, to this ON that we caught when it broke above this area here. So we have two buys on ON Semiconductor on its gap down and recovery yesterday. We're underwater on those coming into today, but it's acting pretty well relative to the fact that it was a leader coming in. It reported earnings. It raised their guidance. It beat and raised on their earnings. So the numbers are there for the thesis that this can go higher. Granted, it is overbought here, but it hasn't rolled over and broken below the 80 level. So we're holding this position for now. It's coming up to the top of its base. Maybe it'll put in a handle here, but also maybe the indexes themselves might be too much on this possible pullback here and the correlation between the dollar and bonds to keep it from going higher. And if it does, we'll be out of it, just like we've got stops on every position that we had. So a little bit reduction in our overall volatility adjusted beta today across the overall portfolio. And bottom line, as I mentioned, day 2 of a pullback is a distribution day. So you can see our close down here underneath here, this 40.80 level, which held today. We want to make sure that that holds going into tomorrow. And on the upside, this 41.20 area, this declining 100-day moving average, that's where the bulls want to see us get above. So that's our index review. Let's take a look at a couple of different stocks. Sedge had been participating in its market leadership position. Let's get rid of stochastics here now as we look at the stock charts. So you can see this this has had a nice gap up move on first the end phase earnings and then the Manchin supporting the reconciliation budget. You know who hasn't supported it yet, though, is Arizona Senator Sinema, and she could put a fly in the entire budget ointment if she decides not to back it. I think you're going to see some big sell-offs in clean energy stocks if she doesn't support this. But anyway, after hours, Sedge down 13% on its earnings report, so it's just right above this breakout level here. It's why one of the reasons we hadn't chased TAN recently was because this earnings report was still outstanding and they just were too extended. You don't want to buy extended in a bear market rally, but that hasn't been the case for Celsius, which has had several double doses of good news recently with its Pepsi distribution. This is one of the hottest stocks in the market. We want to find a way in it. We were in it. We exited it to reduce risk going into the Fed. That ended up biting us, but we do take a defensive position first, especially when we're in the 200-day moving average. So Sedge after hours not acting well. A former leader that got completely beaten up but is having a good time after hours is PayPal, up near the 100 area, up 11% after hours on its earnings report. PayPal still under the 200-day moving average, and this is a stock that just got absolutely destroyed in starting in mid-2021 when it just was exited en masse by pension funds, hedge funds, mutual funds, and has dropped from 300 down to below 100. This is why you cannot just buy a stock, put it in a drawer, think it's a leader, and walk away from it because you lost 2/3 of your money in PayPal if that's what you did. Let's highlight a couple of other stocks. Pinterest was another one that got taken apart in the growth stock sell-off, but it had a good day today. A lot of these stocks trying to form a bottom and come off the bottom and make some progress. It gapped up, it closed near the low of its gap of the day, but the volume is there. So Pinterest at least being a hero for a day. Let's see what else we want to take a look at. Lithium, LTHM. had a good day reported after hours, not doing a whole lot after hours, and CCJ also forming a nice base here with a little bit of a pullback handle slash bull flag forming after this move up on earnings. What else is a standout here that I wanted to bring to your attention? Oh, how about one that's not standing out after hours? AMD. Another one, another former big growth stock leader, sold off from 164 down to 70, coming off the bottom, looking pretty good with other semiconductors down 5% after hours. This gets back above today's high, though. Sometimes these gaps down put in the bottom, and the poster child for that is BROS, BROS. Sometimes terrible gap downs just put in the bottom, and if you've got a good fundamental story and growth, maybe it's just an overreaction, but this is the poster child for a viable gap down. We didn't do it, but this is what the signature looks like. Gap down, big volume, 20 area, down from 66 to 20. But that day, we made a day 2 higher high, which means that the high of that day was not enough to contain the downtrend. We didn't go lower. We started going higher. We went from 20 to 40. Is forming a very nice base here with a cup and handle. And it's got earnings in 8 days. So keeping an eye on BROS. This is in the 21 over 21 list. No volume here right now. My expectation is that people are waiting on their next earnings report, but it does have a great growth story. Granted, it's expensive with a 189 PE, but the 2023 growth is 133%, so the PEG ratio isn't really out of whack. Some other things that we own, let's take a look at Silvergate. Again, I want to point out something rare that happened with this. The day 2, we talk about day 2 higher highs after earnings. This had a day 2 higher high in volume after earnings. Now it's forming this little tiny cup here, almost like a high tight flag after this big move up off of the low, going sideways, consolidating. We're looking for some volume to come in. We've got a small size in this. It's very volatile. We're looking for some volume to come into this and take it above this 100 moving average and the 100 Livermore level, which is certainly resistance if you look over here on the left side of the chart. T-Mobile pulled back on light volume today. We've got a 6% position in this. That's looking fine. 26% below average volume, the lightest volume of the last 4 days since it put out its earnings report. That's definitely the volume signature that you want to look for. I mentioned ON, and those are the 3 stocks that we own right now, along with 20% index ETF and SSO, VTIP, which is a short-term inflation-protected bond, and the 5% PSQ hedge, which we can add to if the market continues to go lower. So that's going to wrap it. As always, like to hear from you. Email me, don@revereasset.com, or phone 855-REAL-WEALTH. That's 855-732-5932. Wrapping up Tuesday, August 2nd. This is Don Vandenbord telling it like it is. Thanks for listening and have a great day.